Good morning. Welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Thursday, February 3rd, 2011. It's 11:30 a.m. Eastern Standard Time in the U.S. It's 4:30 p.m. in London. In Mexico City, it's 10:30 a.m. If you need to reach us during the news broadcast, you can please phone in toll-free at 1-866-67-CATEX. Overseas, our AOL instant mail address is CATEX-TV. We have a busy day here today. First, in breaking news, the Insurance Times is reporting, finally, that the Lloyd's Market Association has issued a warning to the market about the ramifications of the current political unrest in Egypt. Let's pull up that shot of the Suez Canal. The LMA said that marine underwriters are concerned by the possible risks to ships transiting the Suez Canal. LMA also said that there are concerns about possible loss or damage to goods in transit on land and in storage for cargo underwriters. The LMA went on to say that property and terrorism markets may have exposure in the form of buildings, and the political and credit markets will be looking at economic losses. But the LMA added that at present the canal remains open, and despite reports of isolated incidents, Egyptian ports are still largely functioning. Unless the situation changes drastically and there is extensive disruption, the current situation is unlikely to have a major impact for insurers. Well, it's about time somebody said something about this. We've been, obviously, with the rest of the world, following what's been going on. We'll get to that in a second after we do the story on Australia. Australian-based insurer QBE is in a little bit of a freeze. Something big is brewing. They seem to be set to buy the U.S. credit insurer Balboa from the Bank of America. This is according to Bloomberg. QBE halted trading in its shares today ahead of an announcement on several topics that would include, quote, acquisition activity. Negotiations were said by an unnamed source to be at an advanced stage, although he warned that the deal could still fall apart. The agreement is thought to include an agreed upfront payment with additional performance-related payments to follow. Analysts noted that Balboa could be worth up to $2 billion, which would strain QBE's balance sheet and might necessitate a round of fundraising. QBE or Bank of America, who owns Balboa, declined to comment. Balboa provides lender's insurance on foreclosed and distressed properties. QBE is also going to update the market on the impact of the recent Australian floods. They might have something to say about this. This is Cyclone Yasi. Came ashore yesterday. Hundreds of thousands of homes in Queensland are still without power. Several small coastal communities really took 170-mile-per-hour winds. However, officials are expressing relief that apparently nobody seems to have been killed by this storm. Authorities are still trying to determine the extent of the damage, but as many as 180,000 homes in northern Queensland are still without power. The strong winds and rain devastated large tracts of banana and sugarcane crops. The sugar futures went up dramatically yesterday afternoon in New York. Forecasters expect that Yasi is going to be downgraded to a tropical low, as it is now somewhere about 500 miles inland. Can we bring up that map again? Yeah, you can see it here. It's in the town of Mount Isa, just all the way to the left. It's really nothing more than a big sandstorm at this point. The insurers are estimating that the damage could be quite substantial. We've got a couple of hits that have come in now already. This is from Tropical Storm Risk. They're saying that the estimate could be as much as $3.5 billion to insurers. If that estimate's correct, it'd make it the second most damaging Australian cyclone on record. Tropical Risk is saying that Yasi was the most powerful cyclone to strike the east coast of Australia since 1918. We've got some other ones coming in. The EquiCat people are saying that the storm could be up, in terms of economic losses, up to $5 billion. This is just after the first 24 hours. They're saying it's likely to have inflicted economic losses of between $2 billion and $5 billion. Suncor Insurance, one of the larger Australian insurers, is saying that because of reinsurance agreements, it expects net claims from Cyclone Yasi will be capped at about $10 million US. So that should get some attention at Lloyd's. News from Munich. Munich Re has announced that its preliminary estimate of its 2010 results, despite substantial losses, is 3.35 billion US. This is compared to 3.52 billion US in 2009. Profit for the fourth quarter was 661 million US, compared to a little over $1 billion for the same period last year. CFO George Schneider said, despite weighty major losses, we are presenting a good result. Our shareholders are to benefit without delay. W.R. Berkley up in Stamford, Connecticut is on the move. Despite competitive pressures in the U.S. and soft premiums, they're continuing to expand. Bill Berkley, the chairman, warned that rates remain at unsustainably low levels. Went on to say existing inadequate pricing combined with declining investment returns will result in an overall lack of industry profitability. However, Berkley's full-year net profit of 449 million US represented a 45% increase on 2009. Congratulations to them. Gross premium written by the group for the full year was up about 4% to $4.4 billion US. The Lloyd's insurer Markel is achieving a 95% combined ratio for the full year 2010. This is worse than the 91% of 2009. The insurer attributed the increase mainly to $33 million or 6 points of underwriting loss coming from the Chilean quake and the Deepwater Horizon explosion. Insurance Insider is saying that the reason Markel posted the 95% ratio was because of large prior year reserve releases in the final quarter, which they say enabled Markel to beat Wall Street earnings expectations. The stock market in New York is down about 21 points right now. We'll go to a word from our sponsors. In Cairo today, even though things are still as they have been on Tahrir Square with a couple of 100,000 people about, it's almost the calm before the storm. Tomorrow is the Sabbath day and the Muslim week. People will be in mosques, and if history is any precedent, after last Friday, after leaving the mosques, they then moved to Tahrir Square. It's expected that tomorrow is going to be the day that the anti-Mubarak protesters are going to be present in Tahrir Square in the largest numbers yet. Yesterday, as you know, the pro-Mubarak groups that apparently were paid mercenaries went into the square on camels and on horseback, prompting a huge confrontation between the main groups. Apparently 5 people were killed. Later on in the evening, the Egyptian Prime Minister appeared on television apologizing profusely for the actions taken by whomever, he did not name who, had unleashed the mercenaries into the square. It's really begun to attract a lot of attention. A number of Western newscasters were roughed up and hit in the square, including CBS's Katie Couric, who was filmed essentially being manhandled a little bit as her camera crew and she were moved around the square. Well, been waiting for this for a while. Front page article in the Insurance Day. The German insurance industry has accused the people charged with getting the international or the European insurance community ready for Solvency II of sloppy preparation. The chairman of the German insurance group's management group, George von Furstenwerth, said that in regards to this latest test, it was actually called the Quantitative Impact Study number 5, the documentation was faulty, he said, and difficult to understand. The final versions arrived in English only 2 weeks before the deadline. The European Supervisors Committee is called EIOPA, E-I-O-P-A. It's an EU body. According to Mr. von Schneiderman, not even mathematicians could understand the documents. Many of the formulas in the Excel spreadsheets were incorrect. He said that this has led to a, quote, deep resentment, unquote, against Solvency II among German insurers. Solvency II is going to come into force in 2013. The EU Commission and EIOPA has tested the system in 5 quantitative studies. According to von Furstenwerth, this general rehearsal was unsuccessful. On this basis, Solvency II cannot be introduced. The German Association is also unhappy about some of the key details of the test. Listen to this one. The yield curve used to calculate interest rate developments up to 135 years forward would lead to sharp fluctuations in life insurers' capital requirements. He said German companies could no longer grant interest rate guarantees for decades to their customers, and they could not continue as long-term investors. The sharp attack is the first broadside of the German Association against the EIOPA. Until now, its leadership had supported Solvency II. Von Furstenwerth said that French and Spanish companies felt similar to the Germans. He went on to add, our colleagues in the UK are also having second thoughts. Well, this can only mean that the deadline is approaching and people are beginning to get very nervous. Up in Hartford, Connecticut, the Hartford Venerable institution swung back to a full-year net profit in 2010. This is despite a 49% drop in fourth quarter commercial insurance income. The group's predicting an even better performance for 2011. The board's recommended doubling the quarterly dividend. Full-year net profit achieved by the Hartford totaled $1.7 billion compared with an $887 million loss in 2009. For 2011, the Hartford is forecasting core earnings per share of up to $3.9 billion. In the United States, new jobless claims fell by 42,000 over the past week, down to 415,000. Economists have been expecting the jobless claim rate to drop to 418,000. So it's a little bit better than people had thought. Well, in China yesterday, state media reports are indicating that a fire set off by fireworks to celebrate the Lunar New Year, the Year of the Rat this year, destroyed a 5-star hotel in northeastern China. According to Xinhua, a fire gutted the hotel in Shenyang, capital of Liaoning province, before dawn this morning. There were no casualties. This is the Dynasty Wangxin Hotel in Shenyang. State media reports say that the fire was set off by fireworks. Here's the rub. Firefighters had trouble dealing with the fire because their fire engine shot water up only 165 feet. However, the building was 720 feet tall. New Year's fires are common in China. The most famous one in recent years destroyed a hotel under construction next to the CCTV's headquarters in Beijing last year. Well, the stock market's still down 20 points. Let's see if there's anything else happening just this second. U.S. factory orders increased in December unexpectedly. Still no new news in Egypt. It's approximately 6:45 p.m. there now, so you can switch to the cable TV news networks, and they'll be showing it to here square. They've been pretty much live there 24 hours a day. Well, thank you for watching, and if we have any breaking news, I'll come back and tell you. If not, we'll see you tomorrow.